Hi, welcome back to my channel where I share my top tips and tricks on how to save you money on your next mortgage. Today we're going to discuss a topic that's often challenging for self-employed individuals in Canada, getting a mortgage. If you're self-employed and looking to purchase a home, this video is for you. Let's dive right in. Before we get into the details, let's address the common misconception that self-employed individuals cannot qualify for a mortgage. In reality, it is possible, but the process can be a bit more complex compared to salaried employees. The key lies in understanding what lenders look for and how to present yourself as a reliable borrower. So let's explore the steps involved. The first step to securing a mortgage as a self-employed borrower is to ensure your financial documents are well organized. Lenders want to see stability and consistency in your income. Here are the essential documents you need to gather. 1. Personal and business tax returns for the past 3 years. 2. Financial statements and/or business contracts to verify your income. 3. Bank statements showing regular cash flow and business transactions. And 4. Proof of self-employment, such as a business license or registration. Remember, the more transparent and organized your financial records, the better your chances are of getting approved. Demonstrating income stability. When evaluating your mortgage application, lenders want to see a stable income history. Here are some strategies to showcase your financial stability. Maintain consistent income. Aim to have steady or increasing income over the years. Fluctuating income can be seen as a risk by lenders. 2. Minimize your business expenses. While it's essential to manage your business expenses, be mindful that overly aggressive deductions may lower your qualifying income. 3. Use legal tax deductions. Legitimate business expenses and tax deductions can help lower your taxable income, but be cautious about reducing it too much as it may affect your mortgage eligibility. We can sometimes add back certain expenses, like business use of home, vehicle expenses, and cell phone bills, but they aren't always allowed. By highlighting your financial stability, you will increase your chances of securing a mortgage. Working with a mortgage professional. As a self-employed borrower, it's crucial to work with a knowledgeable mortgage professional who understands the unique challenges you face. Here's why. Number 1. Expertise in self-employed mortgages. A mortgage professional experienced in working with self-employed individuals will guide you through the process and help you present your financials effectively. 2. Access to multiple lenders and insurers. Mortgage professionals have access to various lenders, including those who specialize in self-employed mortgages. This broadens your options and increases your likelihood of finding the right mortgage product. 3. Pre-approval process. Getting pre-approved for a mortgage can give you a better understanding of your borrowing capacity and help you to narrow down your property search. A mortgage professional is your trusted ally when navigating the mortgage landscape as a self-employed borrower. Finally, alternative mortgage programs. If you find it challenging to qualify for a traditional mortgage, there are alternative programs designed specifically for self-employed individuals. These programs focus on evaluating your creditworthiness based on your business performance and cash flow rather than just your income on paper. Stated income. This program allows you to state your income without extensive documentation. However, interest rates may be higher and a larger down payment or insurance is generally required. 2. Bank statement programs. These programs use your bank statements to determine your cash flow and qualifying income. They may be suitable if you have inconsistent income or a limited history of tax returns. Mortgage interest rates on these alternative programs are almost invariably higher than with most other programs. These alternative mortgage programs provide flexibility for self-employed borrowers with unique financial situations. And that brings us to the end of today's video. Remember, securing a mortgage as a self-employed borrower in Canada is entirely possible with the right preparation and guidance. Organize your finances, demonstrate income stability, work with a mortgage professional, and explore alternative programs if needed. If you found this video helpful, give it a thumbs up and subscribe to my channel for more tips and tricks on how to save on your next mortgage. As always, leave your questions and comments below and I'll be happy to assist you. Thank Thanks for watching, and I'll see you in the next video.